right, well, it is a quiet day on Wall Street, but there is plenty to discuss, from trade and geopolitical tensions to how the markets are interpreting the message from central banks, including the U.S. Federal Reserve this week. Let's bring in Greg Halter, who's Director of Research at Carnegie Investment Counsel, to get his take on all of those moving parts and some of his ideas for investors. Great to have you with us, Greg. Every day we've got another piece of the pie to talk about. There's so much in the air right now. How have you been approaching the markets these days?
Yes, thanks for having me, first of all. We are at Carnegie long-term investors. We weight and tilt our portfolios towards equities. We have really not made much in the way of moves one way or the other, probably 70% overall in equities. And we continue to be believers in the U.S. names, especially. Just as a quick point, I think Amazon, Meta, and Google, those three companies by themselves will spend about $200 billion on just R&D this year. That is a lot of money, and you would have to hope and guess that they are going to get some real productivity and products, services out of all that spending.
Well, let's go there for a second. We can talk about big tech, which obviously makes up a big part of the U.S. market. Those magnificent seven having the lion's share of the S&P 500. I was just looking the other day, actually, at both Amazon and Alphabet, and they actually, based on their valuation, are trading at levels below their 5-year average. I think Meta is a little above. But if you're looking at it purely based on valuation, there might be something to find in technology stocks. I think, though, Greg, and you've probably heard this a million times before, if things get complicated on the economic front, especially for the U.S., and you've got, broadly speaking, an environment that has been pretty supportive of tech and the valuation surrounding those companies, could something go sideways? So you said you're a long-term investor. Are you prepared for that, and yet still seeing this as a clean way to be investing one's money?
We do believe that. We are long-term investors. You know, we rode through Meta's 50, 60% drop, NVIDIA's 50, 60, 70% drop a couple years ago. Some of our portfolio managers added to positions at those levels. Again, we are believers in this theme. This is totally different than 20, 25 years ago. These companies have very strong margins and growing margins, incredible cash flows, incredible free cash flows, despite the fact they're spending a lot on CapEx these days as well. So very defensible businesses. And you correctly point out, the valuations are not demanding these days, especially for Amazon and Alphabet.
All right, well, let's broaden out the conversation beyond some of those big names in technology to give our audience a sense on some of the other investment areas that you might like. Let's talk about financials. Here in Canada, we often talk about the Canadian banks. The financial sector, especially in the United States, is quite diverse. There's a lot of different options out there. How do you approach it?
You are exactly correct. Lots and lots of options. We do like the banks generally. More specifically, we like the big banks. JP Morgan is just a tremendous operator. Outside of that, you've got insurance companies like Progressive and Chubb and Kinsale Capital. So we do like those insurers. And then even outside of that, you've got these fintech type names like Fiserv, which we like as well. So it's a very diverse sector. When you say financials, again, in the U.S. at least, that means a lot of different things. But there are some very good names in that sector.
You know, we've covered tech, we've covered financials. There's a couple of companies that might fall in between both in Visa and MasterCard. And before you joined us, we were talking about some of these headlines on so-called stable coins that have led to less stability in the share prices recently of Visa and MasterCard, which of course have been home runs for investors over the long term. For those who aren't familiar with this story, there's a concern about whether or not the relevance of MasterCard and Visa could fade if we see more stablecoin adoption. To that, you say what?
I did hear those comments as well, and something we've been focused on. We do have positions in both of those, rather large actually, looking at our 13F filings. There's been many attempts over the years, over the decades, of someone trying to come in and displace Visa, MasterCard. They try for a couple of years and then seem to end up partnering with them. But I will say, I mean, these companies, as pointed out, have tremendous margins, tremendous cash flow, very good growth. So they're ripe for someone to try to come in there and disrupt. So far, it has not happened. Will stablecoins be that piece that maybe finally does that? Remains to be seen. At this point in time, it's something we look at very closely, but we are continuing to be holders of those two names and believe in their businesses. One thing I'll point out is customers love the rewards that they get from the credit cards. Not that Visa and MasterCard are paying those rewards, but they enable those rewards. And consumers will be loath to give up that aspect of the credit card business, if you will.
All right, we're almost out of time, but you were very kind in sharing with our producing team a whole range of stocks. If you're a Buy America long-term investor, we've covered a bunch of them, but there are other sectors you like. Utilities, so NextEra, or I believe Alliant Energy, industrials, which would include Eaton or Deere or even Uber, or healthcare as well, where you've got the big weight loss theme, and Eli Lilly, Novo Nordisk, examples of other companies you like. So to sum it all up, you see a lot of sectors within the U.S. Stock market that you continue to like over the long term, even with all the headlines about uncertainty these days.
Yes, I mean, one thing, point out that there is always uncertainty. That's been happening for probably the beginning of time. There's always good companies. What sets a good company apart, we think, is the management. They're able to do something better and different than somebody else, and they are rewarded in terms of their margins and hence the share price. So we do think there's some always good opportunities out there. It's just a matter of finding them and then holding them for the long term. That's probably the hardest thing to do, is holding in there for the long term.